morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov. Sorry I missed everybody yesterday. I want to wish everybody a happy 2026. We're back at you. Same time, same markets. We had, the end of the year, we didn't do podcasts for 2 weeks because the company is off. But we were trading every day and watching markets, so we're pretty informed on what's going on. A lot to talk about today for sure. It was an interesting end of last year with 4 down days going into the end of the year, with no bids in anything and just selling everywhere. And then we come into 2026, and as we discussed on the air, actually the S&P closed slightly positive on Friday. Nasdaq was down, but S&P I think closed up very minimally. So S&P is up again today. So not a down day in 2026, and a lot to talk about, a lot to really cover, and get us going. So let's first look at the U.S. equity markets, and we can talk about what you're thinking moving forward, um, which I think is different than usual. So I'll throw it to you if you want to talk about equities, and then we'll go through all the markets.
Yeah, I feel like a boat in the middle of the ocean, water everywhere, not a drop to drink. Everything looks good technically, but I don't want to buy anything. I just feel like volatility's coming. Implied vol on SPX is at a place where extrapolated forward returns look pretty bad given where vol is. This is the spot where vol tends to pick up, at these levels. Um, Vol has been very interesting. Even throughout December's weakness in the market, Vol has just been falling and falling. A lot of stuff looks good technically. Again, I don't. Gold looks great technically. Do you buy it here? I mean, they're going to be rebalancing.
I'm short gold. Okay, so
You're short gold. I
I am
pared back
short gold.
exposure to that yesterday. There's just like a lot of stuff that looks good, but yeah, I don't think it's wise to get in. I think this is a market where you just kind of you lean back, and I hate to say a cliche kind of a newslettery catchphrase, but this is the type of market where you want to let it come to you.
Yeah, I mean, I see a lot of different things. One, gold and silver. I know they're running up and whatever, and now the institutional and retail involvement is at record levels, record volume on the silver index. The gold index is on a daily basis. And what I'll say to you is, gold's been up the last 3 years, minimally, maybe more, kind of quietly behind like what I call closed doors. And now every clown is in this thing, expecting to, use a pun, to strike gold. And gold is already at 4,500. We have a bet that you say gold's going to be 5,000 before 4,000. I was feeling really confident about that bet coming into the year. And then somehow, on a day where I thought gold should be down, gold was up 100, which was yesterday. We went in, we caught Madero, um, and literally got him unscathed, extracted him from the country, and then basically took over the country for all intents and purposes. And gold went up $100. And I don't know if it's other things that they're looking at. And then one market that you're not touching on, which is really maybe the key market here to look at, is the US bond market and the global bond market. Okay. We're going to be touching over 420 yield in the next day or so, I would think. I mean, things look bad. Why would gold be ripping into a 5% yield? I mean, I know gold doesn't watch anything to trade, but that's what gets me even more nervous. It watches nothing, doesn't watch anything. People trading gold, they're just buying it. They don't know why, they don't know what, they're just buying it. But the bond market is, it's sending signals that things you know, don't look for them, you know.
Yeah, bond market's been a little bit of a pain trade for me. I keep looking for lower rates. And maybe this upcoming jobs report on Friday might change my mind about that. But looking at the March odds for a rate cut, those have come up, but Treasury yields have not come down. Um, so it's interesting. I think this month's economic indicators are going to be important to the market, definitely to the Fed. Last week, Fed minutes, they basically said so, that the quality of the data has been terrible because of the government shutdown.
Well, they're not
And
looking at time out. They're not looking at data. They cut rates when the government was closed and they had no data for over a month. So they're not looking at the data per se. Because if they were, they wouldn't have made that rate cut when they had no numbers. Okay. But what I believe to be true is they're cutting rates because Trump wants rates lower, and all of a sudden you're going to see Fed funds at 3% or even 275, which is ultra low. What people aren't understanding is that's ultra low. In the annals of time, like a 5% Fed funds is kind of natural. Like when I was trading in the 80s, we were above 6. We came in, before I got in the business, we were, at 18%. But since I've been in the business, we were mellowed out at like 5, 5.5, 5.25. So if we get down to 2.75, 3, I mean, that's almost catastrophe levels. And then what do you do? You've cut 3 times and bond yields have literally gone nowhere on the 10-year to maybe even higher. What do you do? Why are they cutting? What does it benefit? Who is it benefiting? Like
they'll
cutting.
start buying bonds. They'll start, doing a QE thing. Uh,
But why
they'll
did
take
wait,
their
wait, 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 wait. The only time they've ever done QE is when the market has crashed, not when the market's exploded into a bubble. They're going to do QE. Why do they need to do QE right
They
now?
won't call it QE, but they'll do something to inject liquidity.
But why? I'm not understanding. Every market is performing at the utmost capacity for years. Why do they need to inject
Unemployment
liquidity
rate,
into the market?
yeah, unemployment rate 4.6, which is an
They
interesting
can't,
one because
but they can't change unemployment. AI, baby, as you would say, AI, AI. The jobs are being taken by AI. So what
I
is
love
cutting rates going to
I
do?
love that. As you would say AI. I'm like the only person that says AI. It's
AI,
beautiful.
baby. No,
AI.
AI, baby, taking jobs. But how is cutting a Fed funds a quarter going to help that in any way? I just think the market has to at some point here, the market has to take its own medicine. And what I'm worried about, okay, um, I was talking to someone yesterday who was with me when I was doing my podcast, and they have a Bitcoin position. Okay. And I loved it. They said to me that Bitcoin's doing so bad that they're just not going to look at it. They're not looking at it. So the bottom line is they're not, this is the
Means I
market we're in. If your stock goes down, just don't look at it and it will come back. So isn't that worrying you a little bit here? That the market is overly long and you know, all of that.
yeah. Yeah, I think what the Fed has been worried about has been the 4.6% unemployment rate, and that's got room to the upside, I think.
I
just
mean, you
looking at
think
the
it matters if we go to a 5.5% unemployment rate? Like what? It's a nothing. I mean, it's a nothing burger. I mean, come on. We've had when did right when did we had almost 10% unemployment recently, not that long ago. So I don't know if
when
that was after the pandemic or
yeah,
whatever, but
pandemic for like 3 months.
whatever. I'm just saying. So we've lived through all of this stuff. I don't see a need for the Fed to do anything, and the cycle may end. Like I don't know. Why do they need to cut a quarter? What does that do? I just don't know what that does. And
Larry, my view
if they
said
need to
my
cut time out, if they need to cut a quarter three times, why don't they cut a half one of the three times? Why are they cutting the least they can cut?
yeah,
Why?
all of what you're saying makes perfect sense. And my view on the Fed is that they could what they do. I think 95% can be automated with AI, baby, with AI.
Exactly.
You
You're not
know,
going to have Fed members anymore. They're
but
going to have a
seriously,
quantitative formula trading
like
the
what do
market.
they like? Seriously, like what do they do? You're talking about a quarter basis point, 50, all that. Um, if they're so data dependent, well, then can't you just take the data and input it into a model and then cut or raise interest rates based on an algo and do and inject and liquidity when needed based on an algo? So I don't know. There's like this discretionary component to what the Fed does, and they've been behind the ball a lot. So I don't see the need for rate cuts. I didn't see the need for rate cuts last year, but the question is what are they going to do? And what we think and what they think maybe are two different things. Like we think they shouldn't raise rates, shouldn't cut rates, but they're looking at the jobs numbers, and they're like, we need to get ahead of that. So the question is, where do you think the unemployment rate is going to go? Where do you think the
I
jobs
don't
numbers?
think well, let me ask you this. They've cut three times and five times off the high. And you're telling me unemployment's going higher and higher and higher. So the five cuts haven't done one thing, right? I mean, is that what you're trying to tell me? That unemployment's
No,
going higher?
I don't know because the data looks You know what? You know what? I really lost faith in the economic data. Remember last year after like we had tariffs, right? And we were all well, a lot of people were very worried about inflation. I started to get worried about inflation when I started to see PPI start printing way ahead of CPI. Do you remember that right after April? We started to see that and we're like, oh, all these companies are hiding their costs and they're going to pass it on. We're going to see inflation. None of that happened. CPI, PPI came in. And after that, I was like, this is
Well, let me ask you
all
this.
these.
Do you actually think there's no inflation right now? You think everything's good? There's no inflation? I mean, that
Well,
they're
it's
making
ridiculous,
you
right? Things are getting more expensive. We could feel it.
Eric, they've deflected it. Do you understand what that means? They've just deflected it. They've put out some fake numbers that are getting people eye off the ball. I mean, you had a CPI at 2.6 when they're looking at 3.1. The Fed has disregarded that number along with basically everyone else. And listen, moving forward, those are the only numbers you're going to see. You're not seeing any numbers, you know. Um, it's just what it is.
This jobs report is going to be interesting because we had that second GDP print
That
of
number isn't even going to be real. Whatever it is, it's not going to be real. They don't have
right.
enough. They don't have
So,
enough time. My friend works at FINRA. Okay, okay, it's a regulating body. Okay, he told me that the government shutdown for 3 months set them back close to 5 years. 5 years to get back to where they were. That's what he was telling me. So how are these government numbers even being parsed out? How are they, like where are they coming from? Nobody knows anything. And then on top of it, everybody's scared for their job to put out a bad number. I mean, listen, if we're going in to extract Madero overnight at 2 in the morning, you're going to lose your job if you put out a bad number. You're not putting out a bad number, okay? And you know you're going to lose your job. He will fire your you know what if you put out a bad number. So the bottom line is no numbers are going to be that bad because they're not going to be pure. They're just not. So that's just my belief. But I do think this year I'm really feeling fairly confident that this year is different. Okay. This is going to be a different year. You have a lot of, I don't know if you call it geopolitical risk, but you have
Oh yeah,
a lot of
oh yeah.
risks that
Yes.
are,
Geopolitical.
but they're going to shake the market's going to shake off everything. It's funny over the weekend when they extracted Madero, there's this app that has like it's kind of not real, like no one trades on it, but it's called IG Weekend Dow Futures and Weekend
Yeah,
Nasdaq,
you,
and that
you were
thing.
glued to it all weekend, Larry.
No, I looked at it to just get an idea, which it gave a really bad idea because it was showing down big and it opened up big. So, and
But
it
it showed
happens
gold
all
up
the
the
time.
whole time.
What?
I was watching it too. I'll
So
admit.
I'm just saying it was down.
The gold
So
number was right. It was showing gold up like 1.5% over the weekend.
dude, who is trading gold on IG Weekend Gold? They call it IG Weekend Gold. Okay, you know what's funny? But you brought up a really great point. Okay, you're
No
looking at
way.
that. You're saying it's setting the price. You know what sets the price for
I
the
never
old?
said
You just said it.
that.
You did. You just said it was right
But it
on
sets.
gold. It set the price.
Okay, I'll
So
take your word for it.
okay, well, that's what you said, but I'm not saying that. What I'm saying to you is these sites like IB and Robinhood set the mantra for the opening, and if you look at the volume in like Nvidia, it's tiny, tiny, and it's moving the markets. So, um, you know, that's that's sort of what's happening here. It's like setting the table off of retail. Retail sets the table, believe it or not, for the moment on the openings. So, you know,
You
that,
really think so?
yeah, I do. 100% I do. A hun- Listen, you talk about watching something, you can watch it. It's real. If you don't
Uh,
listen to me, if you don't like the price, get a Robinhood account or an IB account, and you can go against what the retail is doing. And the retail sets the price. You'll see it. It comes into the 4 o'clock opening. Equities open on the exchange at 4 a.m. and it opens exactly where all these stocks are trading, plus or minus very small. So retail sets the table 100%. Um, and it's just it's literally an amazing market. It really, really is. And you saw a little bit of pure trading at the end of the year when the algorithms got shut off. Like no one was trading like the last 4 days of the year, and you saw what happened. I mean, you were there. We were like, I can't believe this. There's no buyer, not one. And then you come in, and it's like this. The algo's back. Buy Nasdaq, sell S&P, roll out of that, get back in that. But it's funny what we do in our office when touchdown is here. I basically say to him, "Hey, is Apple up or down?" And he goes, "Oh, Apple's up." I go, "Okay, it must mean Nvidia's down." Yesterday they both went down, but usually when one's up, the other's down. We saw that spread move $15 in one day. One was up 8, the other was down 7. Okay, we've seen the algo go crazy, but maybe this is the year where the algo kind of loses control. So, I would
I
just
agree. I agree. Just not right this very second because I don't think there's a trigger, but I'm looking for it as well. And one of the things you mentioned before, the geopolitics, I think it's pretty interesting. You and I were talking about it before the weekend. We were talking about it on Friday. We were doing another podcast. We were talking about it. And that this year could be a big year for geopolitics. And then bang, like over the weekend, they go into Venezuela. The reason I thought so, that we would have a year of geopolitics driving markets to some extent, is because of the midterms. And if you're an adversarial nation and you want to do something globally against the interests of the USA, you would do it around the midterms because um, you think the politicians are kind of stuck. They can't do anything. They don't want to rock the boat and lose the vote, right? And maybe what Trump did here was like a preempt to that. Maybe they had some info or intel that China and Russia might be trying to do something. And maybe that was kind of like, hey, let's get things in order here. I'm very surprised China hasn't come out with any kind of real response. I think they're kind of looking like, and I know like this is a buzzword out there on the conservative side, but they're kind of looking like a paper tiger. You know, they're
I would not
they're
listen.
backing a lot of. You know how many
They're literal.
Venezuela? They're they're their number one lender. Okay, people say we took over Venezuela. China already took over Venezuela, and so it's already colonialized by China. So
I
where's
get
their
it,
response?
but they swore in the vice president who was sitting in the front row, China. Okay, they showed it yesterday. China, Russia. Okay, they swore in the vice president. Okay, I think you're underestimating China in a huge way. Okay, and I think you saw that straight out when Trump got on a plane to fly to do a trade deal where they were going to hold hands and sign the thing and get a photo op, and the guy flew 20 hours on a jet. Okay, got there, literally got shunned, turned around and left. And you think China is
That's
a
a business deal.
tiger?
That's maybe a failed business deal, right? But
Well,
this is
business
like
deal. No, it's a
this is warfare.
misinterpreted business deal. China's, dude, let's get back to where's the China trade deal? I mean, now there's a year, less than 2 years to go. Okay, till he's out of office. Where's the China trade deal? They now only
Yeah.
have 2 years. They're never signing a trade deal, dude. So what do you mean they're a paper tiger? They're a paper tiger, they would have laid down. They didn't lay down.
Whatever. That's a political thing. That's a political thing. But in general, I think this is what we're. I think we're going to be seeing a lot of this kind of stuff this year. It's going to be a weird year. It's going to be a weird
No,
year.
but you're saying China laid down. How did they lay down? I
No, I
think
didn't say
China
they laid
has
down, but
become more
I said they're
powerful.
looking. No. I didn't say they laid down. I said they're looking like a paper tiger because they've been
What would you
backing
like them
Venezuela.
to do? What
They
would you
had a
like them to
delegation
do?
there over the weekend. As soon as the delegation left, they pick up Maduro. I mean, that's sending them a
What are you
pretty.
talking about? I'm telling you what they showed yesterday was the vice president sworn in, and China was in the front row. Okay. Their whole delegation was in the front row. Okay. So I don't know. Why are they in the front row? We weren't in the front row.
The vice
There wasn't.
president is actually part. She's still part of the Maduro regime. There's no actual regime change yet, right? They're just prosecuting him on drug trafficking so far. What happens next is going to be
No,
interesting.
the vice president was given an ultimatum before she was sworn in to basically operate under our auspice. Okay. They were not letting her in there unless that's the case. It's just, I just think you're underestimating China in a massive way. And I
I'm
think
not.
you
I don't
are.
think Trump
You
is
are.
underestimating them. I think that's why he made that move. I don't think it was about oil. Do you think it was about oil?
Yeah, I think it was. I think when Trump makes these moves, it's 100% about that stuff. A
But
hundred.
by the time any of that oil goes online after they reshore all the infrastructure that has been decimated as it usually does when you introduce communism, right? By the time any of that oil comes online, he'll be out of office for years. How is this
Okay.
going to benefit?
Who's going to be I whatever, it's not benefiting him financially or whatever, it's what he's going to say he did or what he's doing. Okay, so I mean, I definitely think if that country had no oil, they wouldn't even bother with it. Okay, I mean, if you disagree with that, I'd be surprised. So obviously it has a lot to do with oil. We're not going in to Venezuela to protect, to you know protect the citizens of Venezuela at the risk of the United States. There's no chance of that. But they're the largest reserve of oil in the world. So they want to get their hands on it, which is not a bad idea. I mean, we could seriously help them with infrastructure, etc. But I just think that you're underestimating China. Okay. I would think that, I was talking to someone who's probably on this podcast today. Um, and I didn't see this year as a year that China would go into Taiwan, but I think the odds are extremely high now that that
There
happens.
you go. Exactly. I think this is, yeah. So these are things that we gotta keep in the back of our mind. I think things are bubbling up a little bit in the background, and obviously the market isn't even thinking about that. To paraphrase Powell, but that's out there, and it's going to be interesting.
I mean, I don't even think it has to get to the point where they're going in. It's just rumblings about troop movement or whatever that's going to put a crimp on the market. And I think people are underestimating. And, listen, I don't want to go into 2026 sort of beating the dead horse, but I just think the behavior of the retail investor, which isn't really an investor, is a trader, is the scariest thing that I've ever seen. And I don't think anyone has taken a profit in anything. I think the second half of 2025, now they're claiming retail had an unbelievable year. I mean, maybe it came at the end of the year in gold and silver because they're blasted into that thing. Um,
They didn't have a good year. I don't think they had a good year. I think they had a good year leading into October, and
no,
the
I think
fourth
they had a
quarter.
good year leading into September, and I don't think there's been any money made in retail in over 6 months or in that
Yeah,
area. And
I would I would even go so far as to say the fourth quarter probably decimated all of their P&L.
well, you know what? These firms are saying that retail made a lot of money. Like IB reports it, and Robinhood reports it. Um, but I don't know where that came from and when, but it hasn't been in a while. And I'm telling you, like stocks like Palantir trading at 175 is extremely high. Okay. It's down from 200, but people think they're decimated when it gets to one. If that thing got to 140, this place would blow up. I'm just telling you. And the stock more than doubled last year. I think it was up over 200%. So, I
Speaking
mean,
of which,
these stocks are in jeopardy.
speaking of which, what do you think of Palantir? It's been,
I think it's a
I mean,
short.
I
I think
think
it's
it's a
a
short
20
too,
dollar
right?
short.
I think it's a short as well.
Yeah, yeah, yeah. I can't. We
I
can't be on the same side. I mean, Jesus, God, no way. You're right. You think Palantir is a short? I like it. I
I
like
do.
it.
I freaking do. I just think it's a short. I'll tell you why. I mean, first of all, just the psychology of it. Do you remember I mean, I'm sure you remember first half of last year. I mean, the exuberance when people would talk about Palantir, their eyes would water with tears rolling down their face. Like this is the best, thing ever.
Eric, it was
Um,
the worst. I bought it in the pre-public market at $1.75. It was the worst thing ever. It came public at $7. No one wanted it. Okay. Now it's getting government contracts. I mean, how is that sourcing out your business to a huge level? But I don't want to spend a lot of
I'm just
time.
saying the news over the weekend. I remember going through Twitter and trying to trying to get everyone's take, and everyone's like Palantir. Oh my God! Now we know why it's a $500 billion company. It can't even trade above its
Oh,
technical
dude, it
price.
could do that in a heartbeat. I mean, literally, don't get faked out. This market is made of fake outs. Okay, they fake people out. The thing looks weak, then it explodes up. Okay, I mean, it doesn't matter that. But what you're saying, listen to me. The government, okay, does whatever it does. Palantir is not the reason why. I mean, they're involved in helping, but it's not making this thing from government contracts, uh, a half $1 trillion company. And then on top of that, I'm telling you, I think the real catalyst for anything that's going to come forward is this midterm. I don't. Can you go on Polymarket? I'd love to know the betting odds on losing one of the houses because it was about 80%. I'll bet it's still 80% or more. I think that they're done, and the next 2 years is going to be spent on impeaching Trump every other week. Doing this, doing that. So,
Well, you're assuming Republicans are going to lose, right?
well, I'm saying that's what the betting odds are saying, and I don't bet against these defined outcomes because there's billions and billions of dollars bet on this stuff. And these guys know they do deep research. It's like what we looked at. Remember last year into the election, Trump was like neck and neck in the polls, and Polymarket was like 85%, 90% Trump. So, you know,
So right now, the highest odds for the outcome is a Republican Senate, Democratic House at 47%. Democrat sweep is actually at 34%. A Republican sweep is at 17%.
what's the
A
split house?
Democrat,
What's the split house?
the split house with a Republican Senate, Democratic House, 47%.
What about the other? The flipped other way.
Democratic Senate, Republican House,
Yeah.
almost zero. Almost zero. So they're saying
So
if
the
they
odds went
split,
down. The odds went down significantly because I thought it was up at 80% that they were going to lose it. I don't know. But that's going to be the talk moving forward. We need a lot of war. I think, to get to a little bit of trading, I think oil is a buy here, actually, which is counterintuitive of what you would think. I just think, you know, the odds
yeah,
of,
actually, yeah,
I mean,
technically,
literally, I had people calling me over the weekend, literally thinking oil would be in the low 50s, and then they realized that, they weren't getting this oil so quickly. Um, there's a lot of trades out there. I kind of start looking at natural gas here at $3.35, down from $5.35. It's down like 40% off the high. I don't know if it's all weather related or, supply related. But that thing looks horrendous. I mean, does it get a two handle in front of it again? I don't know. You know?
um, I like the trade to the long side.
Yeah.
You know, yeah, I might put that on. I might
I
put that
kind of
on.
like oil here. Um, and
Well, I see it technically, but I don't see a forward curve signal, but I do see one in that gas. So
yeah,
yeah, silver is almost at 80. So basically, what happened over the last week or two in silver is the CME raised margins two times, silver dropped, and now it's right back up to the high.
yeah,
So
but but I'm not understanding. What is it telling you? Why would it drop? 15, 18%, okay, which in silver, is the new zero. Silver for the year is already up double digits. It's up over 10% for the year.
Choppers are, yeah,
In three trading days. But my question is, they raised the margins, so why is it ripping now? Why, if they raise the margin, shouldn't it, go the other way? Like people
it
can't
did.
speculate
It
as
did.
much.
It did, but that was just a 1 day thing. Every time they raised the margin, the next day it dropped. They did
But
that two
why? But
times.
why does it drop if you know it's going to just go right back? I mean, I don't know. I mean, personally, how the U.S. government and Trump are opportunistic. Okay, like us, the opportunistic trader, they're opportunistic. They should get out there and sell some of their gold supply. Okay, if they actually have one. I don't, it's debatable whether they actually have gold in Fort Knox. Never been proven. But I don't know if I had the gold and people were asking about it, wouldn't I show it? Like they never show the gold. But my point is this. I mean, I don't know. I was trading at the very, very, very end of the Hunt brothers, okay, who cornered the market in gold and silver. Okay,
Wasn't it just silver?
what?
I thought it was just silver,
No,
but
I think it was both. And gold went crazy, but here's the deal, okay? This is kind of the same thing. There's no real natural seller of gold. I mean, maybe producers, but they're small. And then basically everyone's buying up the commodity for whatever reason. And the crazy thing about gold to me is it stores no value. You actually have to pay to hold it. So I don't know what the love affair is with this. I mean, I bought some puts in gold. Thank God I didn't short futures or anything. And that's the beauty of options. Um, you know, but overall, I mean, I don't know. I don't know. It's a crazy thing.
there's a big rebalance coming um, this month. I think they usually do it, if I recall. I used to be very involved in these rebalances and trading around them. And I'm not sure if the rules have changed, but usually they would do from the 5th to the 10th business day of January. They would rebalance like the Bloomberg Commodity Index and the Dow Jones UBS, S&P GSCI, all these passive commodity indices. So that's upcoming, right? 5th to 10th business day of January. There's going to be a rebalance. Right now, the weighting is very skewed towards precious metals because of the move we had last year, and they want to get those percentages down in the index. So there's going to be some. Now they're going to be hiding that selling here and there. They're not going to just like, market sell the thing, but that's coming. So that's another thing why I'm like, everything looks great technically, but there's just stuff out there that I don't want to be in front of. Like, I
But
want to be long.
how does gold look great technically to you? Like, here's how I look at gold, okay? And then I'll let you, see what you're seeing, okay? Here's how I look at gold. No one was really in it. Especially silver. Silver was a hunk of junk. Silver didn't break the high for 50 years, okay? It took them 50 years to break this high from the 70s, okay? 50 years, okay? Now gold is in everybody's portfolio, okay, in a big way, probably in an overweighted way, okay, which is fine. It's whatever, okay. The market went up and made a high at 4,550 ish, okay. It came off to almost 4,200, okay, which isn't a lot, okay, in the grand scheme, but that took out like the entire up move. And then if you add in today and yesterday, it got back almost the whole move in 2 days. of work that you would think would take months and months and months and months. So to me, as a trader and someone that watches markets from the outside, I don't like the action in this, and I think it could really get hit. And
But isn't just what you isn't just what you described. And I'm not saying I recommend buying gold ahead of this rebalance coming up. I'm not saying that. And I'm long term. I'm very bullish on gold. But what you just described is actually bullish to me. Like like a move that you say needs to take 3 months happens in 2 days to the upside. That tells me people like can't wait to buy the dip.
But
Like whoever
but
wants.
that's a net. But that listen to me. In the world that we live in 2026 or whatever, with the algo computer and retail all over the place and Ken and Jane running in front of orders that they see in gold, okay? Yes, that works in that way, but in the annals of trading, why are you
Ken
laughing?
and
Ken
Ken
and
and
Jane.
Jane.
Ken and Jane. Ken and
What's
Jane
Ken and
run. You don't know what Ken and Jane is.
I know what Ken and Jane is, but the
I'm
people
not
don't know.
saying who it is. Okay, you're gonna have to figure everyone watching, you're gonna have to figure that out on your own, okay? But but Ken and Jane are running in front of the orders and they see the retail
You come up
and
with that? Did you come up with that?
you like that?
It's awesome.
So Ken and Jane are running in front of it, and the bottom line is, and when that changes, they'll drop gold 500 points in a day. You will see gold down 500 points in a day, 400 to 500 points. It's only 10%, but you're going to see that in a day when they exit the arena. But what I'm saying to you, as someone that trades on an everyday basis, you're saying like that action looks good to you. To me, that action doesn't look good because it's excess volatility. Okay. People are dying to get out and dying to get back in. Dude, you saw it when you claimed
Oh,
on the Trading with Larry show.
gold dropped because of silver, right? They upped the margin on silver, and gold started just like silver. It's like the mental patient taking over the asylum, right? Silver took over gold for a little while, and so like when they upped the margin, gold dropped 200 points.
No, but dude, listen to me. I traded it and I've been trading it fairly actively right now. Okay. No, I'm just telling you. There were 2 days in there that gold held up way better than silver, and then silver dropped on the day after 8%, and gold was flat. Okay, when we were at basically 4,300. Okay, so I've been trading it, but what I'm saying to you is, you keep saying the market's collapsing on just one day because they raised the margin requirement. What if they raise the margin requirement today? I mean, what is it going to crash? I
It'll
mean,
fall. No,
what?
no, yeah, no. It'll do the same thing it did last week. They upped the margin. It
I
dropped.
don't, dude. That's not.
The next day they pick it. Then they upped the margin a second time. It
Well,
dropped, and
listen,
then
they should up the margin to in unlimited. Why are they upping the margin? They're upping the margin because they're worried. They're worried about what I'm talking about. They're not worried about the upside. The margin isn't hurting anyone on the upside, correct? I mean, who's getting hurt on the upside? Everybody's long. So I think they're worried about margin on the downside. Okay. They're worried about having, and I don't know what the limit. It would be interesting to know if, I know these commodities have limits. Be interesting to know what the limit in gold is, whether it's 10%, 20%, it's a big number. But, a lot of these commodities for people out there, and I know a lot of people are now in gold and silver and, whatever else, they're trading. A lot of the problem for futures traders back in the day was the limit down move. Okay. Even in S&P, like we had a rule in S&P. It's funny to talk about because no one even knows what the limit is, but we used to go limit down all the time. Literally limit down where I sat at my desk and we couldn't make a trade. Okay, so we were limit down. Can you imagine that? There's not a trader on this podcast that knows what limit is, okay, on the S&P. All right.
I remember
So
gold. I
what I'm telling
gold
you is
was
a,
down
a lot of
2013.
what?
I remember trading gold limit down in 2013.
Right. Okay. Well, what I'm saying to you is, as a trader, um, um, as a trader, I would always, so like S&P would be trading near the limit. I would try to sell as many S&Ps as I could before it got to the limit. Because what would happen is they would have a trading halt for, I don't remember what it was, 10 minutes or whatever it was. Okay. And we've had a lot of them. No one can remember them. And there's probably no one that's trading that traded through them, or very few people. You had to be trading really before 2000 for sure, to see that. We would go limit up. I mean, not limit up. We would go limit down every day. We actually went limit up on a day where you want to talk about injecting liquidity. You want to hear what they did? It was a Friday. There was only one option expiration. No one can believe this because there's option expirations every day. There was one a month. It was the Thursday into Friday, okay, into quad witching, okay, quarterly expiration, and the US government stopped shorting of stocks. You were not allowed to sell a stock short, okay? We went limit up. Okay, it was the biggest scam in trading history, and I think that might have been in '08 or '09. But anyway, the problem with commodities and limit down is when it gets to limit down, like live hogs, used to go limit down for 5 straight days. What happens if you're long into that, Eric? You can't even liquidate. There's no trading. It just goes to a price and then goes to another price. No one even knows anything about that. I'm just telling you.
You know, I traded for a commodity pool briefly in like 2015, 20. So I met a lot of commodity people, and you always make fun of me. What edge do you have trading lean hogs and live cattle? And I tell you zero. But I'm okay with that because you know who the worst performers were in the fund? The physical traders that are close to the barn.
I
So
listen. I don't
make
know.
of that.
I listen when it comes to these
They
commodities.
have the
I'm
insider
just saying
information.
gold has um, gold has risk. Um,
Here's
when
the
it,
way I look at gold fundamentally. You say, what does gold react to? Nothing. Do these two lines look similar to you,
they look
Larry?
exactly the same.
Exactly. So that's the yield curve on the top panel and gold on the bottom panel. And this is since the yield curve started steepening back in 2023. So
But why would gold be
that,
moving up into a steepening yield curve?
and by the way, historically, you backtest gold against the sweet spot in gold is when you see rates either stable or falling, and this action in the yield curve. This is the sweet spot in gold. So
Dude,
I
up
would say,
until 5 years ago, gold was a hunk of dude. I looked at gold. You know where gold was a year ago? A year and a half ago it was 2,300. Okay, come on. I mean, this thing was a hunk of junk for years and years and years. Okay. I mean, literally, gold got to like 800 or 1,000 back in the 70s, and it took 40 years to double. I mean, I listen, the gold trade is past me, meaning like it's just, gold could be anything. You can make it up. It could be called dog shit. And it's just, everybody wants it and they'll pay any price for it until it reverses and changes. But I see, listen, we're getting close to wrapping. I see a lot of change in the way gold is trading today, right now, from where it was trading in 2025, 2024, and 2023. And there is a reason why they're raising margin requirements on silver. Okay. And it's not, and it's not to basically worry about the people short. It's worried about the people long when silver goes from 80 to 60 in one day, which it easily can do. Easily. And that would put it where
He's
it was a week and a half ago. So that's what I see. I don't think the action looks good. Listen, can it go up? Yeah, it can go up. I think if you take out yesterday's trade in gold, which didn't make sense to me because I thought the Madero raid was so clean that it would have the opposite impact on gold. Okay. But, this is a crazy commodity. But I think they're worried about what I'm saying, where, like gold's up 10%. I mean, silver's up 10% for the year, gold's up 3% for the year. I mean, they could wipe that out in an hour of trading. I'm not even kidding. An hour of trading, and then set you know the bar the other way. So I'm playing for that. I'm using stops. I just want to be clear as we get off the air. I like nat gas a little bit. I like oil. I think you may get the extra kicker of a strike in either Iran or somewhere around the world that could, give you a $5 to $10 spike in the product. Okay. I think the risk, I didn't like oil all of last year. Okay. But I'm kind of liking it now. Currency still a no trade. Dollar is going to continue to be weak. I would put bonds up on your screen, the 10-year note. I mean, that thing is going to cross 420. We're going to see how fast it gets to 4.25, and that could be the crimp in the equity market. I know you think the Fed is here, to save everyone and whatever, but the Fed cannot control interest rates. They can control short-term interest rates. They can maybe pump liquidity in, but as far as what my kids need and what everybody needs is they are focused on the 10-year note. Okay. They want their mortgage payment to go lower. They're living above their means as far as, a lot of people are locked into these. You have two different classes of people. You have the class of people that got interest rates at 2% on a 10-year, okay, that can never move because even if they sold their house, they now have to replace it five and change. Okay. And then you have the people that are in houses now that overextended waiting for rates to go lower and they have not gone lower. So I think there's a lot of cross current. Um, Today in gold, if it goes through negative on the day, flat on the day, it's up about 25, which isn't a lot. If it goes through negative, I'm going to get short a little bit. Other than that, I'm not going to do a trade there. And the equity markets are, I mean, the equity markets are back to the
What do you
same.
think about SPX here? The chat wants to know. Give us
What do
some
I think of
SPX.
what?
The chat wants to know about SPX levels for the day.
I don't know. I'm gonna leave that to you. What I'm seeing to start the day is the same. I have this emoji on my phone. Everyone, I think, has it. It's a picture of a clown. I think the clowns are back in control. You have the Nasdaq up 40. Um, you have, you have the S&P flat to lower. Um, they'll probably unwind that at some point in the day. So look for that, to get more flat potentially. Also, it's funny. I was listening to Jensen Wang. Jensen is about 60 plus years old. He's wearing this black leather coat. I mean, it's like a bizarre scene out of a movie. And all he does is pump his stock. And yesterday he was talking about they're gonna make a robo taxi. Okay. I don't know. The stock was down, then it
Yeah, but
went
he
up.
said, but he said robo taxi that is able to think logically, and I think it was a response to what happened in San Francisco when the traffic lights went out.
Well, dude, I understand that, but that's how it's run. I mean, I don't know how he's going to run it. I know his guy is going to be thinking about everything. Come on, dude, listen to me. All I'll say is this, and then we're going to end the podcast. My son has a Tesla. He has a self-driving feature. It's freaking unbelievable. It's the most unbelievable thing that I've ever seen. We drove 45 minutes. We didn't touch the gas or the steering wheel. The turns were smoother than any turn you could ever make. The car was smarter than anything you've ever seen. So I don't know what Jensen's going to do, but it doesn't make a lot of sense, okay, that he can do, whatever. I mean, the car is a super 10. I mean, super 10. It's very impressive. I won't buy it because it's not comfortable, and the car rides really, really poorly. Like I was
As
in the
soon as you
passenger
get
seat.
one, and as soon as you start leaning back and letting it drive you, you're going to become the biggest AI bull ever.
No, I mean, listen, that's been
No?
going on. My son, no, you can't, like, listen, you got to be a little bit on top of it. He is on his phone and whatever, but it's pretty impressive. So I don't know what Jensen's doing. And then the better part is he says maybe 2027, okay, which is 2029, 2030, maybe. So I don't know what hype comes off of that, but somehow they hyped it up. Um and and that's it. So listen, we're a couple of minutes from the opening. Sorry, running late. Glad to be back with everybody. Hope you guys are getting stuff from this podcast, and I hope we're clear and concise on the trading we're giving, and I wish everyone luck trading, and
Why
you
don't we just
guys.
trade live already? It's almost 9:30.
Nah, we're not trading live. I can't trade live, dude. I'm regulated by the SEC. Okay. I cannot trade live. Have a good day. Enjoy.